Good afternoon. Welcome to daily currency update from the currency desk. On the last trading session of the week, that is on Friday, we witnessed a very dull movement in the dollar against the Indian rupee rate. For intraday, there was a very narrow range of around 10 paise wherein the dollar moved. But yes, at the end of the day, we saw some gains for the Indian rupee, like about 10 paise, and we saw a positive close for the week for the Indian rupee. Now currently the Indian rupee is trading at around 3.5 months high. We can expect some further gains for the Indian rupee at current levels. In the current week, we have the GDP data due to be released in a day or two. So based on this GDP estimate, we could see some movement in the dollar against the Indian rupee rate. If there is some positive outcome of the same, that is, if we have a GDP estimate of over 5.8%, we could very well see the Indian rupee extend the current rally. Again, what supported the Indian rupee was the overnight gains in the euro and the pound. As we saw the USD index weaken a bit, and at the same time we had a few negative data from the US front. We had a statement from Fed officials stating that if the jobless rate comes down to around low 7%, there would be some reduction in the QE levels. So based on this, the rally in the euro and the pound was capped. Again, we are due to see some short covering intraday, as the Indian rupee has rallied quite a bit. So currently we see a resistance of around 52.80. One can keep 52.80 as a stop loss and buy for short-term rebounds in the US dollar against the Indian rupee rate. Though in the longer run, we recommend to sell on rise in the dollar rate. Coming to euro has hit a 14-month high against the US dollar and currently is in a strong bullish trend. Also, there has been some positive data also from the European front, which are stating that a recovery is well on track, and based on this, we can expect the rally to continue, especially considering the fact that the US dollar is weakening against all the major currencies across the globe. The US dollar index has come down from around 80.64 to near 79 levels. So till the time the weakness in the US dollar index remains, it is well an indication that we could see the euro rally further. Also, the markets are very much bullish due to the statement of the ECB that 27 banks are about to repay their LTRO, which comes to an amount of around 3.5 billion euros. Currently in the euro against the Indian rupee, we are not seeing much upside because it is near lifetime high levels and there is a relative strength in the Indian rupee. So currently we recommend to book long or exit long positions near 73 levels, as we could see a correction from there on. Coming to the pound, we had a fourth straight week of decline in the pound against the US dollar rate, and we are seeing a string of negative data continuing last week as well. We had the consumer confidence data and the manufacturing PMI data, which came in lower than expected for the UK economy, and this is again putting a question mark regarding the recovery of the UK economy. UK AAA rating is now well under question, and a lot of market experts are raising questions as regards to whether the rating should be AAA or should be degraded from here on. Based on this, in the pound against the Indian rupee, we have seen downside of around 1% today in the morning session. Right now, pound against the Indian rupee has reached a support level of around 83.15. We can expect some bounce back from current levels in the pound against the Indian rupee. But yes, if the level is broken on a closing basis, we could see further downside. The downside rally would extend till 81 levels. So currently we would recommend to wait for a bounce back in the pound and then initiate a buy position. In Japanese yen, due to the US dollar weakness and a negative jobs data from the US front on Friday, there has been some bounce back for the Japanese yen. It has weakened a lot in the recent month, and currently it is one of the worst performers of all the developed countries, falling by around 16% in the last 2 months. Currently, technically also most traders are expecting a rebound in the Japanese yen levels, and based on that as well, we have seen some support for the Japanese yen against the Indian rupee as well. But yes, till the time the rate remains below 59.57 levels in the spot, we can well see the rate moving down, having a room of downside up till 55.85 levels. So we would recommend a short with a stop loss of 59.57 in the spot for the Japanese yen against the Indian rupee. Thank you.